Well, it's time now for a look at the day's top business news, and for that I'm joined in the studio by Brian Quinn. Hi, Brian.
Hi, Axie.
We're starting in Vietnam, where the US is seeking to deepen cooperation in a bid to counter Chinese influence.
Indeed, Haxie. President Joe Biden has been in Hanoi for a series of top-level diplomatic and economic meetings. Biden led a delegation of U.S. tech and industry executives as they met with Vietnamese business leaders on Monday. Google, Intel, and Boeing among the American firms represented there. The White House confirmed a $10 billion deal for Vietnam to buy 50 Boeing jets today. Well, that comes after Biden and Vietnamese leader Nguyen Phu Trong signed a historic comprehensive strategic partnership on Sunday. That deal includes deepening cooperation on developing Vietnam's semiconductor industry as well as its deposits of rare earth minerals. It comes as Washington is seeking to decrease its reliance on China amid tensions with Beijing. Liza Kamenov reports.
The U.S. is now at Vietnam's top level of diplomatic relations. The country's leaders signed a historic deal in Hanoi on Sunday as Washington seeks new partners to counter China's growing influence in the Asia-Pacific region. The comprehensive strategic partnership secured with Vietnam's Communist Party includes a deal on semiconductors and rare earth minerals, vital resources for manufacturing high-tech devices like smartphones, electric car batteries, and most importantly, weapons. It's part of a US effort to diversify and strengthen global supply chains following a series of shocks to the global economy.
We're deepening our cooperation on critical and emerging technologies, particularly around building a more resilient semiconductor supply chain. We're expanding our economic partnerships, spurring even greater trade and investment between our nations.
The US expressed its commitment not just to helping Vietnam expand microchip production, but also to support the training of engineers in the chip sector and reduce exposure to China-linked risks. Last month, Biden restricted US investment in Chinese technology such as semiconductors, quantum computing, and artificial intelligence, yet claims the Vietnam trip is not aimed at containing China, but at building a stable base in Asia. Vietnam has the world's second largest deposits of rare earth materials, but details on the minerals plan remain vague. Past attempts made by US companies to cooperate with Vietnamese mineral firms have not succeeded.
Let's get a check on the day's trading action. Now, Asian index is mixed on Monday. The Nikkei in Tokyo down 0.5% as the Bank of Japan says it plans to gradually wind down its monetary easing policies. Shares in China's Country Garden are down more than 6% in Hong Kong as the embattled real estate developer tries to convince creditors to extend its debt deadlines in a bid to avoid default for the third time this month. The Hang Seng ending the day down 1.2%. Here in Europe, indexes opening in positive territory with basic resources leading the way as investors look ahead to the latest U.S. inflation data due out later in the week for signs that the Federal Reserve could continue hiking interest rates. The European Central Bank also set to decide its next interest rate move on Thursday. London, Paris, and Frankfurt all up from around 1/3 to 0.5% at the open. To Australia now, where global energy giant Chevron is trying to head off planned strikes at two of the world's top liquefied natural gas facilities. Workers at the Gorgon and Wheatstone plants in Western Australia began limited walkouts on Friday, sending wholesale gas futures prices up by double digits. Unions say 2 weeks of full strikes will begin on Thursday if their demands for better pay and working conditions aren't met. Chevron now says it does not expect to reach a deal with unions. It's appealed to Australia's Fair Work Commission to impose an agreement. That's an untested legal strategy that's unlikely to head off work stoppages this week. Earlier, France 24 spoke to Xfinity Group's chief markets analyst Han Tan about what that could mean for global commodities markets.
We did see a double-digit spike in gas futures last week, at the tail end of last week. And of course, those fears could grow greater if no deal is reached by September 14th, just a couple of days away, which could mark the start of a 2-week shutdown, right? So full-on disruption could see global supplies being scarcer, especially as we head into the upcoming winter. But again, plenty to look out for between now and then.
Finally, for business, we saw it with Beyonce's Renaissance tour. Now it's Taylor Swift's turn to boost the hotel industry. Swift's Eras Tour has been selling out stadiums across the U.S., with tickets for her international shows disappearing in minutes. Fans often traveling long distances to catch the stars' performances. The investment firm Bernstein has analyzed hotel data from the U.S. states that Swift's tour has hit so far, finding revenues roughly 7% higher during her stops. Now, much of that boost is due to higher room prices, but increased bookings play a role as well. Hotels in Philadelphia were 11% fuller during Swift's show nights, while revenue per room was up nearly 60%. And Haxi, if we remember, during Beyonce's last tour, her shows actually contributed to national inflation measurably in certain countries like Sweden. So we'll be looking to see if the Federal Reserve, Jerome Powell, mentions Taylor Swift in the upcoming meeting minutes this Thursday. I doubt it, though.
We'll keep an eye open here on France 24. Brian Quinn with that business update. Thank you very much.